among ladies and gentlemen. I'm Hiral Datia. We have with us Mr. R. Gandhi, former RBI Deputy Governor, joining in. Welcome to the show, Mr. Gandhi, and a pleasure to speak to you as always. Mr. Gandhi, my first question coming to you is overall, if you see in terms of what's happening across economies, inflation has been a major concern. Plus, you have central banks who are increasing rates as well. And we have the RBI monetary policy in this week. So what's in the coming week? So what's the sense that you pick up across?
Okay, thank you. Thank you for asking me to share my thoughts on this subject. Thank you very much. Yeah, first of all, India is operating in the world, right? We are increasingly interconnected. So India's economic situation cannot be discussed in isolation. It has to be in the context of the whatever is happening in the rest of the world, be it in the advanced economies or in other emerging economies. That context we should always keep in mind. It is not that entirely we are influenced by whatever is happening outside. India has its own inner strengths, but due to continuous interaction with international trade and businesses, we do get impact on various factors that we have to keep in mind. So the geopolitical situation which continues today, the oil price that is elevated at elevated levels, the food inflation that is getting spread all over the world, all those things certainly through various channels it is impacting on Indian economy. That part we have to recognize that. But on our own, certainly the Indian economy remains the fastest growing major economy of the world. Every international forecasting institutions, be it IMF or World Bank or OECD or any other private like rating agencies and others, everybody clearly understands and agrees that India will be the fastest growing major economy in the current year. So that is one big solace for us, that because India has got its own inner strength to carry forward its own growth engines based on its own internal consumption, internal production capacity, and the way the country is growing. We have to be comfortable with that. That's number one. Number two, about the inflation, yes, Western world especially have been reeling under very high inflation after, even though their inflation targets are typically at 2%, the ruling rates are at 9% or something similar in the US, in Europe, and all other kind of countries. Whereas in India, we are able to maintain inflation around 7% now. So that itself is again in the context of whatever is happening in the world, imported inflation. Despite that, we are able to keep the inflation under check at 7%. That is something to be appreciated. And going forward, whatever is going to happen, that as you mentioned, that MPC, which is going to be meeting next week, I would expect further rate increase, because we have to keep up with whatever is happening in more specifically what Fed has done in the last week. So to keep up the interest rate differential in a manageable position, as a bank and the MPC may have to hike the rate in this sitting as well.
Right. So what quantum of increase are you expecting?
Okay, 25% is 25 basis point is certain. That's a minimum, and up to 50 basis point we should expect.
So, right, so 25 to 50 basis points is the increase that we can expect.
That's right.
Right. And with this, overall, if you see in terms of the inflation and the growth, what are the kind of numbers we should be working it for India?
Yeah, the forecast has been about the inflation that towards the end of the year, inflation will come within the RBI's band of 2 to 6% that we should be expecting, because now the two major concerns which have now got reduced. One is the oil price. Oil prices are not further increasing, rather actually they have started trending down. That is giving some respite for Indian inflation. The second is the international food prices have also started coming down with Ukraine wheat going around the world. It will be good for the international food prices to be tamed. And in India, our monsoon forecast has been so far good. So that would mean that inflation in India, we should be able to bring it down at around 6%, given the MPC's action which has already taken place and further action which is expected.
Right. And overall, with all of this said and done, how are you seeing the macro picture, especially in terms of where the trade deficit, the fiscal deficit is concerned?
Okay. Trade deficit, yes, it has been increasing, and that is one positive way of looking at it. That way, economy is really growing. So growth needs requires both imports and exports. Export by in the last count, kind of little slowed down, but imports have been increasing. So that would mean that by the economy is growing. That's first point. But the trade deficit per se increasing is not of a major concern. We should be looking at the CAD, current account deficit. That is what had increased in the last 1 year or so. It had reached around 3% or 2% plus. So that is a cause of our concern. That is where the attention will have to be paid much more. And then corresponding to that is that our capacity to fill the CAD through capital account transaction. So yes, in the last several quarters, the FPI flow has been now capital flow out has been happening. The most recent count, yes, it has started correcting itself. Last year we had very good FDI. Where this year, whether we are going to maintain that is one thing which need to be watching out how the FDI net FDI flow into India is happening. That need to be, because these two are important from the perspective of meeting the CAD. So that is where, without too much dipping into the reserves, we should be able to do that. The ECB terms have been modified also, so that would also be enable further funds flow, capital flow into the country. So that is one thing which need to be certainly be watching. And that is about the CAD. About the fiscal deficit, yes, so far good in the sense that there has not been much greater movement to disturb whatever has been announced in the budget. Budget numbers are certainly higher. Both the fiscal deficit and the market borrowing programs are much higher than the previous years. So so far it has been within limits. So it is not giving any indication about whether we'll be overshooting the targets, either in terms of fiscal deficit or in terms of the total borrowing by the government. So so far good, but we have to keep our fingers crossed relating to these two deficits.
Right. And overall, Mr. Gandhi, from here on, what are the key aspects that one needs to constantly monitor to actually keep a check and balance on the health of the economy?
Yeah, the thing which will be kind of should be continuously watching, of course, from the international perspective, the oil prices, the Ukraine-Russian, whether it is further escalating or it is slowly tapering out. So that needs to be watched out. Food inflation, of course, we can discount. That way it doesn't look like that is going to be major cause for concern. This oil certainly will have to be looking at. Any other geopolitical issue like Taiwan, China, or whatever, it is unlikely. But by those things which can always disturb the international flow. So that one area we need to be constantly watching. Second, how the FDI is behaving. So far, the latest data for the current fiscal has not yet come. So that is one thing which we'll be doing, because as I said, that the current account deficit is higher. So that if you have to fill in that gap, if you have to finance current account deficit, then corresponding capital account surplus should be there. Otherwise, the resources may have to be dipped into. So that is why the FDI flow, that will be one important data point which should be continuously watching. As a counterpart to that is, of course, API. API turning positive again, then it will also add to the strength that we'll be looking forward. Internally, monsoon, the final the next month, by this month and or September, we should clearly know about the full impact of the monsoon. So that will give a clear indication about how the rural economy is going to be performing, agriculture and the corresponding rural demand, how it is going to be picking up. So that is certainly that will be looking forward. So any other slippage in terms of fiscal deficit, any other large expenditure, it is unlikely. So far, there has not been any such demand or indication coming up. So it should be normally, it should be all right. That's what I would
Right.
see.
A lot of things that we need to watch out for from here on as well. And really, it's great to hear, from a veteran like you that yes, we could be one of the fastest growing economies, and the concerns versus the Western world are much less for a country like ours. And we are on a pretty good trajectory and a growth plan if things function as we want. Thank you, Mr. Gandhi, so much for joining us on the show. Always a pleasure to speak to you. Thank
Sure.
you. Stay safe and speak to you soon again.
Thank you. Thank you very much for the opportunity. Bye-bye.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.